right, everyone, welcome back to the podcast. Today we're diving into something that feels like it's been buzzing around us for the past couple of years, but with a new, rather mind-bending twist. We're talking about the AI bubble, or, as some are now calling it, the AI bubble that might have already burst.
Yeah, it's like we're in Inception, but for economic speculation. You think you've got a handle on the bubble, and then suddenly there's a bubble within the bubble, and then someone says that bubble has burst. My brain just melts trying to keep up. But honestly, the market itself doesn't seem to be getting the memo that the bubble talk is over. It's still, shall we say, very much bubbly.
Bubbly is an understatement, Jake. I mean, just this week, the Financial Times reported something that made my jaw drop. 10 AI startups, collectively not a dollar in profit among them, have racked up nearly $1 trillion in market value over the last year. $1 trillion, with no profit.
That's not just bananas, Bob. That's a whole fruit stand of tropical, exotic, possibly genetically modified bananas. It defies basic economic sense, doesn't it? And you hear Wall Street analysts, tech media, everyone's kind of scratching their heads comparing it to the late 90s dot-com era, which, let's be honest, didn't end well for a lot of companies.
Exactly. But the AI industry, they just shrug. They watch their valuations tick higher and higher and higher. The faithful, the true believers, they just say, look, this technology is going to disrupt everything. Phone operating systems, pharmaceuticals, finance, everything. And they've got that line, well, the dot-com bubble gave us Amazon and the internet, so even if there's a bubble, it's fine.
That's the ultimate trust me bro argument, isn't it? Yeah, a lot of companies went bust, but look, we got Amazon. It feels a little like playing Russian roulette with a few extra chambers. But while the optimists are shrugging, there are some serious skeptics out there, and one of them, Garin from Macro Strategy Partnership, just dropped a bombshell report that we absolutely need to talk about.
Oh, Garin's report is something else. He's not just questioning the hype, he's outright claiming that we are in the biggest and most dangerous bubble the world has ever seen. He goes on to say that the current frenzy is 17 times bigger than the dot-com bubble and 4 times bigger than the 2008 real estate bubble. That's a statement.
17 times bigger than .com, 4 times bigger than 2008? Those are not just bold claims, Bob. Those are like climb Mount Everest in a Speedo bold claims. What makes him so convinced that this is not just a bit bad, but the antithesis of socioeconomic progresses?
Well, Garin lays out a few key points, and it all boils down to what he calls a golden rule. He argues that if you use large language model AI to create an application or a service, it can never be commercial, and he has 3 core reasons for that, based on how LLMs are built and applied.
Okay, that's a huge claim. Never be commercial? That goes against almost everything we're hearing from the AI evangelists. What are his reasons?
First, he says it's about how they were built. The original LLMs use vectors to understand the statistical likelihood of words following each other. He admits it's clever engineering, but fundamentally they're limited. They're predicting text, not truly understanding or reasoning. So for complex, commercially viable applications, that's a huge hurdle.
So they're essentially super advanced autocomplete machines, not genuine innovators? That's a pretty stark assessment. It does make you think about those moments when an LLM hallucinates or gives a confident but incorrect answer. It's because it's predicting, not truly knowing.
Precisely. And his second point builds on that, specifically regarding how LLMs are applied to coding. He says they've basically learned from existing code, both public and private. So when they generate code, they're essentially showing you rote-learned pieces of code. Again, great for certain tasks, but if you want to develop genuinely new, innovative applications, that's going to be extremely limited.
That's a bit like a student who's great at regurgitating textbook answers but can't solve an unfamiliar problem. It's useful for automating existing processes, sure, but not for pioneering new ones. And isn't the whole promise of AI about pioneering new things, about creating entirely new solutions?
That's the rub, isn't it? His third point hits on scaling. Garin argues there's a serious problem with how much you have to spend to actually improve these models. He's quite definitive that developers have hit a scaling wall. If they hadn't, he reasons, we'd be seeing demonstrably better models with each new release. But since ChatGPT-4 came out in March of 2023, he says they haven't actually raised the bar significantly.
Steve, back out there. That's an interesting observation. We hear a lot about new models, new iterations. But have they truly delivered a quantum leap in capability since GPT-4? It feels more like incremental improvements or specialized versions. If the cost-to-performance ratio has become prohibitive, that's a huge commercial barrier right there.
Exactly. Garin's conclusion from all this is pretty stark. None of the AI companies have produced what he calls the killer app. You know, that one application that fundamentally changes everything, the way Google did for search or Facebook for social media, or even the iPhone for mobile computing. He just doesn't see it.
And without that killer app, without something that truly generates massive, undeniable, profitable value, how do you justify those bananas valuations we talked about earlier? It becomes a house of cards. But what about the argument that even if it's not a killer app, ChatGPT, for instance, can do a lot of low-level grunt work and increase productivity?
Garin addresses that directly. He acknowledges that there are bullshit jobs out there, certain parts of management, consultancy, where people might not check or even know if you're getting it right. So he says you can argue that you can replace bullshit with bullshit, and yes, you probably can. But he quickly adds that doesn't really make it more broadly useful or economically impactful.
Ouch. Replace bullshit with bullshit. That's a pretty harsh take, but it does ring true in some corners. It's like you can automate a bad process, but it's still a bad process, just faster. So if that's the extent of its productivity boost, how should regular people, who aren't market analysts, think about all this money swirling around the industry?
His view is that the entire AI ecosystem as it stands can't really sustain itself. He points out that Nvidia is making a ton of money, selling the picks and shovels, so to speak. But everyone else, the data centers, the LLM developers, the software developers using LLMs, they are all heavily loss-making. They're burning through cash.
So it's a permanent funding tour, as he calls it? They're just constantly looking for the next round of investment to keep the lights on because there's no clear path to profitability? That sounds exactly like a bubble, doesn't it? It's hope over realistic expectation, and when you run out of investors, the whole thing rolls over.
That's his concern. He argues that the amount of venture capital willing to fund these startups, especially the software developers, is starting to diminish because their valuations are already so high. So who's left to fund them? He points to SoftBank, which has had to raise a lot of debt for its OpenAI commitment, and still has a bigger second tranche to fund.
And then there are foreign states, like Saudi Arabia, but even they don't have unlimited spending power. So if VC money is drying up, and even these mega funders have their limits, it leaves Nvidia, the chip maker, as the last man standing, making all the profit. That's a very narrow foundation for an entire trillion-dollar industry, isn't it?
It absolutely is. It highlights the unsustainable nature of the current setup, in Garin's view. And the big question everyone wants to know is, are we in the process of deflating, or is the bubble still growing? He admits it's hard to say precisely, especially when we're just a week past all-time highs, but he does believe it's certainly drawing closer to the top.
So we're at peak bubble, or very near it, according to Garin. But you always have to ask the counter-question to such a strong claim. What if he's wrong? What if the hype is real and we just haven't seen it yet?
He considers two ways he could be wrong. The first is simply that it takes longer to break than he thought. He admits it's already taken longer than he initially expected. But even in that scenario, he says, it just means people continue building things that aren't fundamentally useful to the economic society.
And that's not a good outcome, even if it delays the inevitable, right? The longer it goes on, the more capital is misallocated, the more people are doing work that won't make a return. He argues that the future GDP will actually be lower than if people just went about doing mundane things that people actually valued. That's a really sobering thought.
It is. And his second way he could be completely wrong is if someone actually does come up with superintelligence. That, he concedes, would completely change the world. We could be in a utopia, or a brave new world, or even something like Kurt Vonnegut's Play a Piano, where everyone's employed but only a few live in ivory towers.
Superintelligence. That's the ultimate if scenario, the sci-fi dream or nightmare. But Garin sounds pretty grounded about it, doesn't he? He believes it's beyond our current industrial society's capability to pull off. And he says if that starts changing, he'll change his mind very quickly. He just hasn't seen it yet.
Right. He's open to being proven wrong, but he needs to see concrete evidence, not just hype. So what we're left with is a market that's undeniably bubbly, fueled by massive investments, but underpinned by what a very serious analyst like Garin sees as fundamental commercial limitations and an unsustainable financial structure. It's a stark contrast to the prevalent narrative.
It really is, Bob. It makes you wonder how long this can keep going. and what the eventual fallout will be. Whether it's the biggest bubble ever or just a really optimistic bet, it's clear we're in uncharted territory. And it definitely makes you think twice about those trillion-dollar valuations with zero profit. It's a fascinating, if somewhat terrifying time to be watching the tech and finance worlds.
Absolutely. It's going to be crucial to watch how venture capital flows, how profitability stories actually start to emerge, if they do, and whether those killer apps finally materialize. Thanks for joining me on this dive into the AI bubble, Jake. It's a lot to unpack.
My pleasure, Bob. Always a wild ride in the land of AI. Until next time, everyone, keep your eyes open and your investments, well, do your own research. We'll catch you next time.